This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Thursday, extending a steep decline the previous session due to signs that Saudi Arabia, the world's largest crude exporter, could raise production and data showing a contraction in the U.S. economy, the world's top oil consumer. Brent crude futures fell $1.10, or 1.8%, to $59.96 a barrel as at 12:07 GMT. U.S. West Texas Intermediate crude futures fell $1.14, or 2%, to $57.07. The oil market remains concerned about weakening oil demand growth over the coming months due to the trade tensions as well as a faster unwinding of the OPEC Plus production cuts, said UBS analyst Giovanni Stanovo.
U.S. crude oil stockpiles fell unexpectedly last week on higher export and refinery demand, while gasoline drew down for a ninth straight week, the Energy Information Administration said on Wednesday. Crude inventories fell by 2.7 million barrels to 440.4 million barrels in the week ended April 25, the AIA said, compared with analysts' expectations in a Reuters poll for a 429,000 barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub for futures rose by 682,000 barrels in the week, the EIA said.
Moving on to the top news in the energy sector.
Russia's finance ministry raised the 2025 budget deficit estimate to 1.7% of gross domestic product, GDP, on Wednesday from 0.5% after reducing the energy revenues forecast by 24% due to expectations of a prolonged period of low oil prices. The ministry lowered the 2025 oil and gas revenues forecast to 8.32 trillion rubles, $101.47 billion, or 3.7% of GDP from 10.94 trillion rubles or 5.1% of GDP. It also increased the 2025 spending plan by 830 billion rubles. Russia already hiked state spending on national defense by a quarter in 2025 to 6.3% of gross domestic product, GDP, the highest level since the Cold War, as the country continues its war in Ukraine, now in its fourth year.
Saudi Arabian officials are briefing allies and industry experts to say the kingdom is unwilling to prop up the oil market with further supply cuts and can handle a prolonged period of low prices, 5 sources with knowledge of the talks said. This possible shift in Saudi policy could suggest a move toward producing more and expanding its market share, a major change after 5 years spent balancing the market through deep output as a leader of the OPEC Plus group of oil producers. Those cuts supported prices, in turn bolstering the oil export revenue that many oil producers rely on. Next, we have the top news in metal markets. Kyiv and Washington on Thursday hailed a deal giving the United States preferential access to new Ukrainian minerals as a milestone which a top U.S. official said would allow President Donald Trump to negotiate with Russia on a stronger basis. The Kremlin was silent on Wednesday's agreement, but Russian former President Dmitry Medvedev said it meant Trump had broken the Kyiv regime, because Ukraine would have to pay for U.S. military aid with mineral resources. The accord, which was signed in Washington and heavily promoted by Trump, establishes a joint investment fund for Ukraine's reconstruction as the U.S. president tries to secure a peace settlement in Russia's war in Ukraine.
Gold dipped to a 2-week low on Thursday, pressured by signals of softening trade tensions and a holiday in top consumer China, while focus was also on Friday's U.S. payrolls report to gauge the economic outlook. Spot gold was down 2% at $3,222.43 an ounce at 9:30 a.m. Eastern Time, 13:30 GMT, after hitting its lowest since April 14 earlier in the session. Prices hit a record $3,500.05 per ounce last week. U.S. gold futures were down 2.7% to $3,231.
We will now look at the top news in the agricultural sector.
Sugar futures traded on the ICE exchange hit a 3-1/2-year low on Thursday following data showing a contraction in the U.S. economy, the world's largest, and fading supply fears. May Day public holidays around the world, including much of Europe, meant trading was thin. The main negative is the US dragging the world into a global recession with its tariff wars, said New York-based sugar broker Michael McDougall. Raw sugar fell 0.9% to 17.11 cents per pound at 10:30 GMT, having hit its lowest since July 2021 at 17.10 cents, while white sugar fell 0.5% to $490.40 a ton.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.